Good morning, everyone, and welcome to yet another vlog. This time on the important provisions of Cost Accounting Standard 6. Yes, Cost Accounting Standards, especially from Cost Accounting Standard 1 to 8, are very, very important for your examination. So, one by one, I am creating small revisionary videos for all the important cost accounting standards so that you can easily revise them, easily prepare them for your examination and score good marks. And needless to say that these cost accounting standards hold about 20 marks in your examination. So including practical topics, questions as well as theoretical questions, total cost accounting standards will hold nearly 15 to 20 marks in your final examination. So very, very important aspect of your syllabus. So let's start with one of the most important cost accounting standards. The name of the standard is material cost. Yes, the starting point of your cost sheet. We have studied since inter that the starting point of our cost sheet is material cost. We have to first add the material cost into the cost of production, and only then can we find our actual cost. Please note that there are guidance notes which have been issued on Cost Accounting Standard 6 on material cost, which are very, very important for your examination. Some of the guidance notes I will be covering in this video, and I will be giving hints on some other guidance notes which you have to do yourself after completing this video. So let's start. Okay, so first of all, the definitions of the Cost Accounting Standard 6: cost object, defectives, waste, spoilage. These are the definitions which I have already discussed in Cost Accounting Standard 1. So I am not repeating them over here. I am directly moving on to a very, very important definition which has been inserted via amendments in 2017, and the definition is property, plant and equipment, PPE. Now, please note that this terminology has been borrowed from the IFRS. Yes, Ind AS uses this terminology, and to align the cost accounting standards with the Ind AS, the institute has in 2017 revised certain accounting standards, cost accounting standards, and have introduced this terminology known as property, plant and equipment. Students, those who are giving December 2018 attempts, it is recommended that I have uploaded a video on the amendments to cost accounting standards and cost accounting rules, which is there on my channel. Please see that video properly. So, what do you mean by property, plant and equipment, PPE? PPE means tangible assets. So, it does not include intangibles, it only includes tangible assets. Tangible assets that are A, held for use in production of goods or service, or for rental to others, or for administrative selling distribution purposes, and are expected to be used for more than one accounting period. So please note that because of insertion of and, both these conditions are to be satisfied cumulatively. So you have to hold these assets for production of goods or supply of services, and they are expected to be held for more than one accounting period. Then they are covered under definition of property, plant and equipment. Sir, what are the ingredients of material cost? What all materials are to be covered by the Cost Accounting Standard 6? This aspect has been discussed in detail in the guidance note. So GN means the guidance note. Guidance note told us that apart from the basic raw material, there are certain other materials as well which forms part of the material cost. What are those materials? Those materials are, of course, A, raw material, which is the basic or main material which is used in process of manufacturing. Then there is certain process material, or known as additions. These are the material used in addition to raw material. For example, lime used in sugar industry, sulfur used in cement industry. So these material are not the basic material but are the additions or certain process material which is used in manufacturing process but are not the basic material or the raw material. These are also to be included in material cost. Third, manufactured or bought out components. So there may be certain parts or certain material which you have manufactured, either manufactured in your factory or have purchased from outside. These components also should form part of your material cost. Then subassembly or aggregates. So you can sometimes be an assembler, be a aggregator, whereby you obtain certain parts from certain distributors and just assemble them in your factory. So for example, for a car manufacturing company, automobile industry, steering wheel is a aggregate or a sub-assembly. The companies do not make steering wheel, but they obtain steering wheel and they aggregate it to their main car, to their main automobile. So the steering wheel is known as sub-assembly or aggregate, which forms part of the material cost. Then comes the accessory. Yes, accessory means something over and above the basic material or the basic product. So if you have an AC in the car or music system in the car, then those are not primarily the functionality of a car, but they are additionally added to the car to make car more useful. So accessory is known as components which are not essential for basic functioning of the product, but they are additions which are made to the main product. Then there are certain consumable stores and spares, items which are used in maintenance of plant, for example, lubricant, paint, oil, spares, purchased items used for replacement of worn-on part. These also should form part of material cost. Then there are certain other indirect material, for example, item of small value like nuts, bolts, nails, etc. These costs are typically not identified with a particular product and hence are categorized as indirect material. So these are the 7 type of materials which are covered by cost accounting standard 6. Now one very important part, that if you are manufacturing a material which is used in captive consumption, that will not form part of CAS 6, but that will form part of CAS 4, which is specifically for captive consumption. So please remember that if the question asks you to determine the cost of captive consumption, then you have to go to CAS 4 and CAS 6 is not relevant to you. Okay, sir. So let us start with the provisions of cost accounting standard 6. The provisions of cost accounting standard 6 can be broadly classified into 3 aspects. There are 3 aspects which we need to discuss in cost accounting standard 6. I am creating a diagram to explain you what are the essential components of cost accounting standard 6. Yes, so first of all, we have to see the principles of valuation of receipt of material. So the first element of any material is that it will be received into our factory. So what are the principles which will deal with the receipt of material which is coming to our factory? And second is, what are the principles of valuation of issue of material? So once the material is received in our factory, it has to be issued to the production line. What are the principles which will govern the issue of material to the production line? This is aspect number 3. And aspect number 3. This is aspect number 2. Aspect number 3 is assignment of material cost. Now we have a bucket known as material cost. How should we assign that material cost to different cost objects? This is our aspect number 3, which the cost accounting standard will deal in. So the 3 things which we are going to discuss in this cost accounting standard are: 1. Principles of valuation of receipt of material. Number 2. Principles of valuation of issue of material. Number 3. Principles of assignment of material cost to cost objects. Now let's start with principles of receipt of material. Now you can have 2 types of material. One can be the purchased material, or which has been purchased from outside. Another one can be manufactured, which you have manufactured within your company. If there is a purchase of material, you have purchased this material from outside, then what will be your material cost? It will simply be the purchase price. Number 2, duties and taxes which you have paid for purchasing this cost. Number 3 will be freight inwards. Please note that freight inwards form part of the material cost. However, freight outwards do not form part of the cost of production or the material cost, but it forms part of cost of sales. Then insurance cost. If you have incurred any insurance cost, then it will be added. then any other direct expenditure which is attributable to material cost, specifically obtaining of material cost, then that will be added while computing the material cost. So these are the elements which are to be included while computing the purchase of material cost. Now please note that there are certain exclusions or exceptions to this rule. What are those exceptions? Number one, exclusions are trade discounts are to be deducted while computing material cost. Number two, any rebate which you have received is to be deducted while computing the material cost. Number three, taxes and duties which are refundable, like convertible in future. Taxes and duties which are refundable are to be excluded from material cost. They have to be deducted while computing the material cost. Please note that cash discount is not given in this exclusion list. So you do not have to deduct the cash discount from the material cost. Sir, why? Why are we not allowed to deduct the cash discount from our material cost? The logic is very simple. The same way in which you do not add finance cost to your cost, like if there is an interest cost, you do not add that interest cost to the material cost because it is a financial expense and not a cost of production expense. Similarly, this income which you receive is not on account of operations but is on account of finance, since you are paying your vendor earlier than the required limit. Therefore, you are getting this discount. Hence, this discount will not be deducted while computing the material cost. So, cash discounts are to be excluded while computing the material cost. Trade discounts are to be deducted, but cash discounts are not to be deducted while computing the material cost. Now coming on to the manufactured goods, if you have manufactured the goods within your factory and you have incurred cost on that manufacture of good, simple, you must have incurred three types of costs: direct material, direct labor, and direct expenses. Over and above this, you must have incurred certain overheads as well, factory overheads, plus very important admin overheads relating to production. So the overheads which are relating to production are to be included in self-manufactured cost. So these are the items which you have to include while computing the material cost for self-manufactured materials. Please note that there are two guidance notes which you have to study yourself. Guidance note number 1, which is guidance note on material receipt, and guidance note number 2, which is guidance note on imported material receipt. You have to read these two guidance note yourself and learn the provisions of these two guidance note. These are very, very important from perspective of the examination. In the book, these guidance note have been discussed on page number 4.32. You must have the book, and in page number 4.32, you have some miscellaneous points valuing the imported material which is referred to by guidance note. Similarly, there's a guidance note on valuation of receipt of material. So on page number 4.31, we have discussed some miscellaneous points on principles of valuation of receipt of material. This is guidance note which has been discussed. You have to study all these provisions from this guidance note. All right, sir. So this is the first aspect of our cost accounting standard. Let us go on to the next aspect of our cost accounting standard. Next aspect is the principles relating to valuation of issue of material. So, issue of material can again be bifurcated into 4 parts. Issue of material is governed first of all by the cash flows. What are these cash flows? Cash flows means the flow of material which is used in your organization. So the word cash flow is used in loose terms. Actually, it is not cash flow, it is the materials flow. So cost accounting standards use the word cash flow, which is used to denote that you have to either use FIFO, LIFO or weighted average while computing the cost of issue of material to your production line. So if there's a production line, then you have to issue material on the basis of FIFO. FIFO means the rates which have been obtained earlier are the rates which are to be given earlier. And LIFO means the rates which are given later are to be given earlier. Weighted average computes an average of two rates where the material has been obtained separately on two different point of times. So the first principle of issue of material is that you have to use an appropriate flow technique, which is FIFO, LIFO, weighted average. Let me tell you out of my practical experience, LIFO is generally not used by the companies a lot. And the most popular technique of valuing the material is weighted average, which is used by maximum companies, followed by FIFO, and last is LIFO. So this is the technique which is to be used while issuing the material to the production line. Second principle is, if you are using standard costing means you are using some standard rates for issue of material, which are the historical rates which were used in your cost sheet in the past years. If you are using the standard rates, then there is bound to have certain variances. So there can be price variance, there can be normal usage variance, there can be abnormal usage variance. So there can be three kind of variances: price variance, normal usage variance, abnormal usage variance. Price variance, whether normal or abnormal, so both normal and abnormal are to be taken to the material cost. Yes, if there's a price variance at the year end when you compute your actual price of material, then if there is a price variance, whether normal or abnormal, it is to be taken to the material cost. Usage variance, if it is normal usage variance, then you take it to the material cost. If it is abnormal usage variance, then you just take it to the costing P&L account. So yes, this is the provision which is enumerated in the cost accounting standard and with the guidance note. Guidance note actually talks about the abnormal usage variance and normal usage variance, and the cost accounting standard talks about the price variance. So cumulatively, if we see guidance note and the cost accounting standard, then the picture which emerges is that if price variance is normal or abnormal, it is to be taken to material cost. Usage variance normal should be taken to material cost, and usage variance which is abnormal is to be taken to costing P&L account. So this is the second principle of issue of material. This is the first principle of issue of material. Now the third principle of issue of material is any abnormal cost should be excluded from material cost. So any abnormal loss or cost which has been incurred during the issue of material, that is to be excluded from material cost. And of course, where should it go? It should go to the costing P&L account. It is not to be added to material cost. It is to be added to the costing P&L account. This is the third principle which is enumerated by the principle of valuation of issue of material. And the fourth principle and the last principle is that I'll write the fourth principle separately. The fourth principle is that any transportation cost incurred on material is to be determined on the basis of principles given in CAS 5. Yes. So if you want to include any transportation cost as a part of your material cost, then that has to be valued on the basis of the provisions which are given in CAS 5. CAS 5 is the CAS for provisions of equalized transportation cost. So these are the 4 principles which are enumerated by the cost accounting standard for the issue of material. Now the last aspect is assignment of cost. Sir, we have a pool of material cost. How should we assign that cost to the different cost objects? So let's discuss the principles of assignment of material cost to the different cost objects. So the first principle is very simple, that any direct expenditure, what is direct expenditure? Which is directly allocable to a particular cost object in an economically feasible manner. Please note that in the last CAS I have discussed the provisions of this relevance of this word economically feasible manner. So direct expense is the expense which can be allocated to a particular cost center in an economically feasible manner. If that is the case, then it is directly allocated to the cost object. We don't have any problem. We'll just allocate it to the cost object if the material cost is directly allocable to a particular cost center. However, in case of material which is not directly allocable to a particular cost center, in that case, we again have to take rescue of the provisions of assignment of cost, which means that we have to assign those costs on the basis of any logical parameter. Assign the cost on the basis of logical parameter like actual usage. If you know what is the actual usage, then you can prorate the total cost as per the actual usage between two cost objects. It can be actual usage. And again, please remember the 2 principles that you have to follow while allocating a particular indirect cost to a particular cost object should be: number 1, cause and effect relationship; number 2, benefits received. In my last video, I have discussed these 2 aspects of allocation of cost in great detail. You can refer to the last video for these 2 aspects. So these 2 aspects remain relevant for material cost, that is CAS 6 as well. So yes, these are the 3 important elements of material cost, and the principles which are laid down for computing the cost of material are these 3 broad principles which are to be followed by you. Now let us come on to certain general principles of Cost Accounting Standard 6. General principles are: items such as spare parts, standby equipments. So items which are spare parts and standby equipments and servicing equipment are recognized as PPE when they meet the definition of PPE and depreciated accordingly. So any spare part which you have used in your business and standby equipment which you have used in your business, that is not to be blindly added to material cost. That has to be analyzed if that part is qualifying the definition of PPE, then they should be capitalized and depreciated and not taken to material cost. So items of spare and part should be taken into consideration. The next very important element of CAS 6 is that the foreign exchange components, if you have any foreign exchange component in your imported material. So I'll give you an example. Just see this example once. Suppose you have on 1st January 2018 purchased an imported material of 10,000 USD from US, and the date of payment is 31st March 2018. You have to pay $10,000 to your vendor. Then suppose on 10th On 1st January 2018, the USD was priced at 70 rupees. Suppose on the date of payment, the USD rose to 72 rupees. Then the question arises, sir, in our cost books, what should we consider? Should we consider 70 or should we consider 72? The answer is very clear. The cost accounting standard says that the rate prevalent on the date of transaction is the rate which is relevant for our cost sheet. So the rate which you should use in our cost sheet should be 70. Despite of the fact that you have to pay 72 at a later stage, which is okay, you incur a loss of 2 multiplied by 10,000, 20,000 rupees. You incur a loss on this aspect, but this loss should not be taken into cost sheet, and this loss should be considered as financial loss and hence taken to costing P&L account. But the rate at which you should determine your cost account, your material cost should be 70 multiplied by 10,000 and not 72 multiplied by 10,000. Okay, the next aspect, very important aspect guys, normal loss or spoilage of material prior to reaching the factory. Please underline these words, prior to reaching the factory. So if there is any normal loss or spoilage of material which is prior to reaching the factory or at places where services are to be provided, this loss shall be absorbed in the cost of balance material. So this cost has to be absorbed by the other material which are fetched by you on that date, and there are two conditions which are to be satisfied. Please note it very carefully. It should be a normal loss. Secondly, it should incur prior to reaching the factory and not after it is reached the factory. So if these two conditions are met, then the cost accounting standards give you a guidance that you can include or absorb the cost of this normal loss in the balance material. Sir, can you please give an example of this concept? Yes, students, let's take an example. Suppose you have purchased 10,000 units at the rate of rupees 10 each from the vendor. You have to pay rupees 1 lakhs to the vendor. Suppose out of the 10,000 units, only 9,500 reaches your factory. 500 is the normal loss which you have incurred before reaching to factory. Prior to reaching the factory, the normal loss is 500. Now the question arises, sir, at what rate should we recognize this 9,500 in our cost books? Please note that the ultimate answer should be the same. So 1 lakh remains 1 lakh. So 1 lakh divided by 9,500, 10.526. So your per unit cost raises to 10.526. This means that you have absorbed the normal loss into the balance units. In case it was an abnormal loss, then you shouldn't have absorbed it in the balance units and you should have taken it to the costing P&L account. So this is the fundamental difference between the abnormal cost and the normal cost. If there is a normal loss, then you have to absorb its price in the balance units. If it is an abnormal loss, then you have to absorb the cost in the costing P&L account, take it to the costing P&L account. So sir, let us take an example where we have abnormal as well as normal loss. So suppose 9,500 units are received at the factory. 9,500 units, 300 was the normal loss, 200 was the abnormal loss. Suppose there is a split between normal loss and abnormal loss. So what should have we done? What should be taken to the cost sheet first of all? And what should be taken to the costing P&L account? So please let us know what is the difference. Cost sheet will have only normal, costing P&L account will have the abnormal portion. So this is the difference. So your total cost is 1 lakh rupees. When your total cost is 1 lakh rupees, I first of all calculate the normal price. normal price is 1 lakh rupees divided by the units which were ordered for minus the normal loss. Normal loss is 300, 9700. So my normal rate comes to 1 lakh divided by 9700, which is 10.31. 1 lakh divided by 9700, which is 10.31. Now what am I going to do? I am going to compute the abnormal loss. Abnormal loss will be abnormal units multiplied by the normal rate. This comes out to 2062. So out of 1 lakh rupees, we will deduct 2062 rupees. 97938 will go to the material cost in the cost sheet, and the balance 2062 will go to the costing P&L account. This is the abnormal loss which you have incurred, and this is the normal cost which you have incurred. So this is the way you should differentiate between the normal loss and the abnormal loss, and the normal loss is to be absorbed over the other products, other goods which you have received, and the abnormal loss is to be charged to the costing P&L account. So these are the primary provisions of this cost accounting standard. I have more or less discussed all the important concepts of this standard. Now a very important which you need aspect which you need to cover, because this CAS has some practical aspects as well. Please do these illustrations at your home. Solutions are with you, questions are with you, you just need to practice them. And if you have any doubt in any of these questions, do let me know. You can message me and ask your queries. And yes, you have to cover all these questions which are given in your module to score good marks in your examination. And yes, I know I am running late in issuing these videos, but I am trying my level best to issue these videos as soon as possible for at least all the important cases which are relevant for your examination. So keep studying and hope you will do well in your examination, and all the best and happy studying.